Hello, very good morning to all. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insight by OANDA. Very good morning. Today will be the Wednesday, the 29th of May, 2024. Wow, how time has passed. We're coming towards close to the end of this month pretty soon. So before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries, pardon me, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay. All right, good. So before we jump straight into the short-term technical outlook, let's have a quick recap on what has taken shape yesterday in terms of the cross assets performance, intraday performance, pardon me, and as well as their respective news flow and economic data that drives these performances. So let's start with the major US stock indices first. So I would say that the major US stock indices yesterday, they just reopened in terms of the US cash stock market. They were actually closed for a public holiday on Monday. So they reopened yesterday. So what I could say that yesterday's session was rather lackluster. If you could look at my screen over here, it's more like a sideways movement for the S&P 500 and the NASDAQ 100. So it started at a high, traded higher during the during the first half of the session, and towards the second half, the earlier second half of the session, so that's roughly around 1 a.m. to 2 to 3 a.m. Singapore time, market actually plummeted during this short period of time before recovering again in the last hour of trading. So the S&P 500 was actually almost unchanged at 0.02%. The top performer remains the NASDAQ 100, which managed to actually gain 0.32% by the end of yesterday US session. Later I'll share with you, it's actually driven by optimism in semiconductor stocks, which is the market leader, is the AI giant NVIDIA. And the worst performer was the Dow Jones Industrial Average. So the Dow Jones Industrial Average was down negative 0.55%, actually dragged by a slew of banking stocks and as well as healthcare stocks, because the Dow Jones Industrial Average, the top component stock is a major healthcare stock in US. So if you look at the Dow Jones Industrial Average, was almost in the red for the entire US session yesterday, but the plus point over here is that it managed to recover right at the closing session, the last 1 hour, and where it bounced off from a key support level right on the Dow Jones Industrial Average intraday, short-term intraday chart on the hourly chart. So later I'll flash your once we covered the short-term technical outlook for the major US stock indices. So given the fact that what is actually causing this, we call it lackluster movement in the major US stock indices yesterday. So on top of that, the Russell 2000 also underperformed, but with a slightly lesser loss compared to the Dow Jones Industrial Average, down negative 0.14%. So what was actually the cause of this lackluster, or I would say mixed bag performance on the major US stock indices is due to the fact of rather hawkish Federal Reserve official speech, because for the first time, there's this guy over here, okay, Fed officials Kaskari. So he's one of the guy together with Bostic earring towards the lash dovish camp. And yesterday he made I believe that he is, so far I monitored his speech and his tonality. This is the first time that he did mention that interest rate hikes are not entirely ruled out. That means in his thinking right now, there's a possibility that the Fed might restart its interest rate hike cycle, totally away from his boss, Fed Chair Powell, thinking, because Fed Chair Powell, in his public speeches in the last few weeks, was being guided to the next step is an interest rate cut. It's only the timing of the interest rate cut and the quantum of the interest rate cut that the Federal Reserve officials got to face a challenge, given the current services, US services inflation is still rather elevated on the higher side of the story. So, but this time around, Cascara did mention about this rather shocking remarks from his end, saying that in his view right now, he feels that he has an opinion that interest rate hike is not entirely ruled out, but he assigned to a low odds probability. All right, over here. Okay, but and also he sees policy as restrictive, and the Fed can wait for more data. Also, this is nothing new because Kashkari, this official Federal Reserve Kashkari, he's more skewing towards the less dovish side of the camp. That means he needs more evidence that inflation in US, especially the services inflation, has starts to plateau off on the downside. All right. So, but one thing positive over here is this guy, he's from the Federal Reserve Bank of Minneapolis. Okay. So he's the boss of this Federal Reserve Bank of Minneapolis. This time round, this year, he is a non-voting member. So what do I mean by that? We in the FOMC, you know, the FOMC, right? The Federal Reserve the Federal Reserve Open Monetary Committee. So this committee will decide the direction of the Fed funds rate. That means every meeting, that means the next one will be in June. These members will come together at a table and vote. Okay, and vote whether the Federal Reserve will hike rates, reduce rate, or maintain interest rate. Fed officials Kaskari for Minneapolis, this time round he is a non-voting member. That means, i.e., he can give opinions, but he cannot vote. Okay, so that is a plus point. Yeah? But can he influence other voters? Possible. Okay, possible. All right. This is one takeaway. So based on his remarks over here, he has a sway in the market as well, even though he's a non-voter, because potentially he could influence other voters' decision-making process as well. So with that actually causes the US 10-year Treasury yield to actually inch much higher. Okay, so very clearly, right, it broke above the 20-day moving average, which is at the 4.5% mark. Okay, so let me put this as a different color. Okay, it broke above this level. So very clearly, right, the 10-year US Treasury yield is on a potential impulsive up move to resume its medium-term uptrend to scale higher high since the low of February this year. Okay, so potentially, right, it could going to scale higher high towards the 4.9% to 5% level. Okay, going forward based on the current technical analysis trajectory as I plotted on the screen over here by the ascending channel, and momentum remains strong. Why? Because the RSI has already shaped a series of higher high and higher low and going above the 50 level mark as well. Okay, and very similar to the 2-year Treasury yield, the lower tenure that has a closer sensitivity to Fed funds rate, also inching much higher as well, and it broke much earlier the 20-day moving average on last Thursday. Okay, so net what we could see over here is that based on yesterday's Fed Kagastri rather hawkish remarks, even though he's a non-voting member, he managed to influence the market participants' opinion as expressed by the US Treasury market, pushing the 10-year and the 2-year Treasury yield higher. So implying that market participants now do have an opinion that interest rate costs, funding costs in US is likely to actually increase in the next month down the road. We talk about next 1 to 3 months, given the current technical analysis trajectory that are plotted on the 2-year and the 10-year Treasury yield. So that actually explained to us the movement, the lackluster movement of the US stock market. Like I say, the US stock market right now, there is still a positive factor, which is micro factor and positive momentum, which is all centered in on the very good business revenue coming out from AI giant NVIDIA based on their previous sterling earnings announcement last week, spilling over to the entire AI technology space, which in turn also managed to have a positive feedback loop in other technology stocks, which has a very huge weightage on the S&P 500 and the Nasdaq 100. So if you look at the heat map of the S&P 500 yesterday, very clearly the top performer is NVIDIA, up 7%, causing a positive feedback loop to the entire semiconductor industry, and also spilling on over some positive gain to Amazon and Google as well. Apple almost unchanged, despite the fact that we do have some positive news up from Apple as well that I want to share with you all since we are talking about Apple. Why Apple is so important? Because it's the second biggest weightage stocks component stock in the S&P and the Nasdaq 100. Nvidia is third, right? So for Apple, yesterday they reported China business shipment, means number of iPhones shipped to China. Okay, over here. Okay, so what I could see over here is that Apple China iPhone, because Apple China is an important key geographical business unit, or I would say Apple do get a significant revenue stream from China, put it this way. So China Apple iPhone sales or shipment, with the shipment which indirectly related to their revenue getting from China market, managed to increase to 52% due to discount that was given, a very broad-based, a very we call it cost-based marketing campaign that was enacted by Apple to actually lower down the sales of their iPhone models in China, so that actually drive the sales volume. So if you look at the chart over here, there's a chart. Yeah, I think there's a chart here. Yeah, it tells this breakdown to us. So what you could see over here is that this is last year. Okay, so at the start of the black is last year, the blue is this year, number of million units of iPhone shipment to China. So what you could see is that at the start of this year, January and February was rather quite disastrous in terms of the amount of shipment. Okay, much lower in terms of month-on-month and year-on-year, the previous year. So what you could see right now is there's a month-on-month improvement in March and a month-on-month improvement in April, as well as a year-on-year improvement as well. So that could actually spill over to some kind of positive feedback loop into the Nasdaq 100 as well. That's why that's actually explained to us the Nasdaq 100 resilient yesterday despite that push up in the 2-year and the 10-year Treasury yield. And one more thing I want to share is due to this push up in the US 10-year Treasury yield, the US dollar managed to actually inch much higher, and the dollar is actually outperforming the dollar yen yesterday. So that is actually within our expectation as well. So what I could see over here is that based on the technical chart of that dollar strength, yesterday was kind of more of a strength within a sideways range movement. So for those who follow our daily dose of markets are very frequent, I do flash out this technical chart of the dollar index using it as an intermarket analysis. So why dollar index? Because it indicates to us at least a view of where the broad-based dollar movement is going by looking at this US dollar index. So what I could see this US dollar index over here is that it's still been trapped within this sideways range between, in short term, 105.20, the straight line here, and 104.20, which is the 200-day moving average as well at that support. So what yesterday's price action over here is that it did bounce off the 200-day moving average, supported by the US 10-year pickup in the 10-year Treasury yield. So what we could see over here is that it could be another round of choppy move, sideways movement again to retest close to the range top, the minor range top at 105.20. Okay, so it's more of the sideways range movement on the dollar index. All right. So right now, given the fact that even despite the fact that there is this rise in the US 10-year Treasury yield, but for gold price still remains pretty much resilient. Why? Because of the ongoing geopolitical risk tension in the Middle East that is still playing out. That is also supporting gold prices despite a push up in the US 10-year Treasury yield yesterday. So what we could explain over here is that gold continues to remain firm. This is the daily chart of spot gold XAU/USD. Give a bit of time to load. All right. So it continues to remain firm, holding above the 50-day moving average. And yesterday it managed to close above the 20-day moving average with a gain of 0.4%. So we have 3 consecutive bullish candle. Okay, sorry, 3 consecutive positive higher closes. Okay, this is the better way to saying it. And yesterday, higher close with a gain of 0.4%, managed to actually surpass the 20-day moving average. So it need to indicate to us that this is not a double. Some people say this is a double top. This is not a potential double top. And if you look at the momentum is still rather positive after a rebound off from this key parallel ascending trend line that I drew from the low of 4th of October. So that actually also come in hand with the rise in oil price as well. So yesterday oil price managed to inch much higher with a gain of almost 2%. So yesterday the most significant movement was oil price. The West Texas oil gaining 2%. One of the reasons to it is geopolitical risk premium is on the rise again, and also I do believe there is several short covering coming to play after that so-called failure breakdown of 78.40, where it started to induce short-term short sellers to come into the market where their position got squeezed up after the reintegration above that 78.40 level, where they roughly placed their stops close to around this 78.40, 79 level. And once this level got taken out, this is where we start to see liquidity cascading on the upside, where prices could squeeze up easily. All right, at least on the shorter term basis. Okay, so this is the intermarket analysis and news flow. And before we start our daily dose of short-term technical outlook for today, data that is out this morning will be out from Australia, our neighbor. So for Australia, they do release this monthly CPI indicator on top of their quarterly indicator. Quarterly CPI indicator is that for the monthly CPI for April, it actually surprised the market. So economist consensus is expect to a dip to 3.4% year annualized, but it actually went up to 3.6% and surpassed above the previous month of March at 3.5%. So if you look at the trend of the annualized monthly CPI indicator reading in Australia, it's slowly going to tick on the upside. So it seems to us that the deceleration from September has started to plateau off as well. And this is the second consecutive month of increase from March 3.5% to 3.6%, pardon me. All right, so that actually also perhaps should put the RBA on guard to in fact think about any potential interest rate cut that could take place this year. Okay, so there's actually a guidance from RBA governor in her previous speeches, stating that there is still a possibility of enacting another interest rate hike by the RBA due to risk of elevated sticky inflation, which the data point is potentially showing right now based on the Australian monthly CPI. So with that in mind over here, market participants now will start to adjust their thinking or their opinion towards a lower odds of interest rate cut in Australia, in Aussie land this year. So with that could also, at least in the short term, on the intraday basis for today, support the Aussie dollar. So if you look later, I'll share the chart of the Aussie dollar. It actually didn't fall much as well yesterday, or in fact in today's Asia session as well while we are speaking. All right, so with that, right, let us now jump straight into the short-term technical outlook. Let us start with the FX market first. All right, okay, so let me go to the FX market. Let me start with the euro dollar. Okay, this will be the euro dollar. So let me expand. Sorry, a bit of a sore throat. Okay, let me expand my screen. Okay, so the euro dollar, yesterday we do have a bullish bias with a first resistance at around 1.09, followed the second resistance at 1.025/1.094. So price action indeed rallied yesterday during the European session. So right at the 5 p.m. mark, it almost hit 1.09, printed a high of 1.0889. Okay, more or less is there. Then thereafter it plummeted downwards. Okay, it actually reintegrate downwards. So more or less right now, it seems to me that this is a potential minor range top on the euro dollar. And what we could see over here right now, it could transit now to the bottom of the range again, a minor range, which is very close to the 20-day moving average. So with that, I'll be using 1.09 as a short-term pivotal resistance for sure for today. First resistance to watch will be 1.086 level that has been surpassed on the downside during yesterday US session over here, but I don't want to use this as a short-term pivotal resistance because it's in the middle of this potential range configuration. So I'll use the top of the range, 1.09. As long as any bounce didn't surpass 1.09, we will flip to a short-term intraday bearish bias within a minor range configuration. Near-term support level to watch, 1.0825 followed by 1.08, which is the minor swing low of last Friday, and also confluencing with the upward sloping 20-day moving average. Only hourly close above 1.09 will revive the short-term bullish bias tone to see the next resistance coming in at 1.0925/0924, above it 0.950. So that's for the euro dollar in short term intraday technical analysis outlook. Very similar on the sterling dollar as well. Yesterday, we do have a first resistance at 1.28, followed by 1.286. So right at the 5 p.m., okay, this is not 5 p.m. mark, so slightly later, during the opening of the US session at 9 p.m., it managed to hit the high, it printed a high of 1.288001, exactly at 1.28. The first resistance that we highlighted yesterday. So given that it's now banking, reacting off the 1.28 level, first resistance level, and with a bearish divergence, okay, with that, we indicate to us that the current upside momentum, at least in the short term, has started to slow down, and potentially there could be a chance of a minor pullback back towards the middle part of this minor ascending channel support, the minor ascending channel, pardon me, that I drew from the low of 22nd of April this year. So with that, we'll be flipping to a short-term intraday bearish bias for today on the sterling dollar, using 1.28 figure level as a short-term pivotal resistance level. Next near-term support level to watch for this potential minor pullback scenario to play out, 1.2710. Below it, 1.2670, which is confluencing with last Friday minor swing low, and very soon the upward sloping 20-day moving average could soon act as a support level around this area as well. Only an hourly close above 1.28 figure level will invalidate this minor pullback scenario to continue this short-term bullish trend, with the next resistance coming in at 1.2860, followed by 1.2940 on the sterling dollar. Okay, at 1.2940 also confluence, if you look at the daily chart over here very clearly, right, it confluence within this minor swing high area of 21st of July and 28th of July last year, and as well as close to this this dark gray line here. This is a major descending trend line all the way from 2nd of June 2014 high. All right, that also confluence very closely to the 1.2940 level as well that I highlighted. Okay, so with that, that is will be the European currency, looking at for some signs of short-term intraday technical weakness on the sterling dollar and euro dollar that I explained earlier. Now moving on to the Asia, the what you call it, the Asia Pacific dollar pair, Aussie dollar. So Aussie dollar, that's why due to the very much more hotter than expected monthly CPI data that I shared with you earlier on, the Aussie dollar going to remain resilient, holding rather firm at around the first support level that we highlighted yesterday, and also above the 20-day moving average as well. So with that, still no change, still using 66.15, and right, you could see here right now there's a higher low that's being formed on the RSI as well, so indicating some form of minor positive momentum that is still intact on the Australia dollar, the Aussie dollar. So as long as 66.15 short-term pivotal support holds, we will still maintain that short-term intraday bullish bias on the Aussie dollar within its medium-term symmetrical triangle range configuration. Next resistance to watch, 67.10 over here. All right, okay, maybe I'll just be a bit conservative for today, for since it's a intraday technical analysis outlook. Okay, I'll use this level, okay, which is yesterday's high, okay, and the last Tuesday minus swing high as well. Okay, so first resistance 66.80, above it exposes 67.10. All right, Only hourly close below 66.15 will negate the bullish tone to see an around choppy decline back towards the lower part of its medium-term symmetrical triangle range configuration, to expose the next near-term support at 65.85 followed by 66.50, which confluence with the 50-day moving average. So overall, this is a recap. This is the daily chart of the Australia dollar. So I could see over here is that these are the two key medium-term levels, technical level to watch: 67.30/50, the upper limit of this symmetrical triangle, and 63.40, the lower limit of this symmetrical triangle. So this is more of a bigger picture on the Australia dollar technical analysis outlook. So it's still going to churn within these two big levels, 67.30 and 63.40. But within the intraday basis, we could actually look at smaller time frame technical levels, which are actually expressed earlier on the hourly chart. Dollar yen continues to bounce within our expectation. So what we could see right now is now moving higher with a higher low right above the 20-day moving average. So yesterday we do have a short-term pivotal support at 155.90. So given right now the break of above last Thursday minor swing high now turns into the first support level at 157.20. So I don't put it so tight at 157.20. I'll push it slightly lower, which is yesterday minor swing low at 156.60, which is so confluence with the previous minor swing high of 14th of May. Tested a couple of times and bounced off. Very clear, this is a key support level as well. So using a tighten key short-term pivotal support for today, 156.60. Maintain that short-term bullish bias intraday on the dollar yen. Next resistance to watch will be a big level at 158 level. Why 158 important? Because 158 is a psychological level, and this level also induces the alleged second round of BOJ intervention as instructed by the Ministry of Finance to actually sell the dollar, buy back the yen, okay, on the 2nd of May. That gives rise to this huge significant intraday decline. Only an hourly close below 156.60 will negate the bullish tone to see the dollar yen in a choppy corrective sideways movement to expose the next near-term support at 155.90/155.10, which confluence with the 20-day moving average and as well as the minor ascending trend line that I drew from 3rd of May. So that pretty much sum up for the FX market. So it's rather a mixed bag right now. A bit of European currency weakness against the dollar as it hit the top part of their range. For the euro dollar, top of the minor range. For the sterling dollar, top of its minor ascending channel, while the Aussie dollar continues to remain resilient above its key support level, supported by a rather hotter than expected monthly CPI data, and as well as the dollar yen continues to evolve within a intraday bullish trend that is still intact for now. All right, so let us now move on to the next cross asset classes, which is the major stock indices. So let us start with the Asia Pacific pair, the Nikkei 225. So for the Nikkei 225 over here, it continues to churn sideways, can't break above the first resistance that we highlighted yesterday since the start of this week, or since on Friday at 38,975, but still managed to hold above the 38,460 short-term pivotal support that we highlighted since last Friday as well, and also conversing with the upward sloping 20-day moving average. So no change there, using 38,460 as my short-term pivotal support level. The first resistance it got to surpass to see much more bullish strength coming back into the dollar, into the Japan 225 or Nikkei 225. It's got to have a clear break above 38,975. That means we need to have a clear hourly close. So yesterday it do have an intraday break, but it didn't have an hourly close by this candle, by this long tail candle. So you need to have a kind of a white candle body above 38,975 to at least have an hourly close to increase the odds of this bullish short-term intraday bullish bias on the Japan 225. That above 38,975 potentially sees 39,500 next. Only an hourly close below 38,460 will see another round of choppy minor corrective decline to expose the next near-term support area at 38,015 level, 37,750 level. Okay, so then now the Hong Kong 33 do have a bit of weakness coming back to the market. So yes, despite the fact that it's still going to hold above the short-term pivotal support that we highlighted yesterday around this 18,340 level, but price action get a bit of not so great below the 20-day moving average. So after surviving the 20-day moving average on last Friday and yesterday. Today, right now, during the Asia intraday session, it break below the 20-day moving average, so giving us a bit of not so confidence of to see the recovery taking shape today. All right, and despite the fact that yesterday it can't break above our first resistance that we highlighted at 18,900 level, okay, before breaking down below the 20-day moving average. So what we could see right now over here is that it could be the potential, it could still play out this ongoing minor corrective decline that has taken shape since 17th of May swing high. All right, this ongoing corrective decline within its medium-term uptrend that is still intact. Why? Because price action is still trading above the 50-day moving average. So if we look at the Fibo retracement, it could retrace much further. All right, taking from the last push up from the low of 19th of April to 17th of May, it could retrace much further to the 38% and the 50% Fibo retracement since the reintegration back below the 20-day moving average. So with that, right, we'll be flipping to a bearish bias for this potential extension of this minor corrective decline to play out, using 18,980 as my short-term pivotal resistance for today, flip to a intraday bearish bias. So the key thing to watch out for, the next support level to watch out for will be 18,240, which is this minor swing low of 8th of May, followed by 17,895, this congestion area here from 29th of April to 12th of April. And these two levels also confluence with the 38% Fibo retracement and the 50% Fibo retracement that I drew from the low of 19th of April to 17th of May. Only an hourly close back above 18,980 will kind of reinstate the scenario for that bullish recovery to take shape again. Next resistance to watch will be at 19,210. Above it sees the 17th of May swing high area at 19,790/19,980. So that's for the Hong Kong 33. The German 30 index, or the DAX, yesterday it rallied, almost hit the first resistance that we highlighted, which is the all-time swing high area at 19,920, before pulling back again, and it retested the previous minor descending trend line resistance breakout on Monday, and now turns into a pullback support and very close to the 20-day moving average, where we also highlighted the 18,570 as my key short-term pivotal support level. So still no change there, using 18,570 short-term pivotal support. So as long as this level not surpassed to the downside, still maintain that short-term bullish outlook, intraday outlook for today on the German 30 index. So for sure, right, the first resistance to watch will be yesterday's swing high at 18,845, which is very close to the all-time high area at 920. So it's like a zone, 18,845/920 level. All right. So this is the first. Okay, in fact, this is the second resistance level to watch. So on the intraday basis, there's one more short-term resistance over here, this level here, that was taken down, that give rise to this rather two consecutive long candle of bearish candle on the hourly chart. So first resistance 18,760, followed by 18,845/920. As long as 18,570 short-term pivotal support holds. An hourly close or breakdown below 18,570 will negate this bullish tone to see another round of minor corrective decline scenario unfolding towards the next support level, near-term support level 18,470, potentially followed by 18,320, which also confluence with the 50 upward sloping 50-day moving average. Okay, the US Wall Street 30, which is which is the underperformer yesterday, due to the fact that it does not have any semiconductor stocks as one of its key heavy weightage component inside its 30 component stocks. So yesterday we were neutral. It broke down the lower neutrality range, and right now it's coming very close to a key support level at 38,550. What is 38,550 is in fact the former minor swing high of 24th of April and the minor ascending trend line that I drew from the minor, in fact it's a medium-term ascending trend line. Okay, if we go over here, okay, it's all the way I drew from the low of October 2023. Okay, that also confluence with the 38,550 support level after the lower neutrality limit that I highlighted yesterday at this 38,970, which is the 50-day moving average. Okay, and if you do the Fibo retracement, over here of the last swing low, from last important swing low of 1st of May all the way up to the current all-time high that was 20th of May, is so close to the golden ratio of 61.8%. So with that, right, I'll be flipping to a bullish bias, given that also the RSI is also rather deeply oversold as well yesterday, using 38,550 as my short-term pivotal support level. First resistance to watch will be for sure the 50-day moving average at 38,970 / 39,130 level, which is the minor swing high of last Friday, and also close to the 20-day moving average as well. So only a clearance above 39,130 will see much more pronounced recovery taking shape towards the next near-term resistance in the first step at 39,390. However, an hourly close below 38,550 will invalidate this recovery scenario to see the continuation of this much more pronounced corrective decline taking shape on the US Wall Street 30 to expose the next near-term support level at 38,330, followed by 37,890 next. Okay, this congestion area here. Okay, so that's for the US Wall Street 30. Nasdaq 100 still continues to trade within its ascending channel. All right, so yesterday is also attempt to actually retest the former all-time high area that was printed on last Thursday, okay, after Nvidia stellar earnings announcement. So with that, right, I will have a tighten key short-term pivotal support for today, rising it to 18,740, which confluence to yesterday minor swing low, and as well as close to the lower limit of this minor ascending channel that I drew from 2nd of May. So as long as 18,740 short-term pivotal support holds, we will still maintain that short-term bullish bias intraday on the Nasdaq 100. For sure, first resistance to watch will be 18,990 / 19,055. Above it, exposes 19,160 / 180, which is a confluence of Fibo extension level. Okay, over here, the 1.382 that I drew from the low of 2nd of May, and the one time from the low of 8th of May. Only an hourly close below 18,740 will negate this bullish tone to kickstart another round of minor corrective decline to expose the last Friday minor swing low at 18,580. A break below it exposes 18,230, which potentially confluence around the 20-day moving average as well, the hour sloping 20-day moving average. Okay, so that's for the major US stock indices. A rather mixed bag right now, with some form of weakness that's being seen on the Hong Kong 33 index and sideways for the Japan 225. All right, spot gold. Okay, yep. So the spot gold. So spot gold managed to actually go above the 20-day moving average, now acting as a first support at 2,355 level. So I do not want to put it at this as a short-term pivotal support. I will use last Friday, that V-shape, this potential turning point here at 2,327, and so very close confluence with the upward sloping 50-day moving average as well. So as long as this tighten key short-term pivotal support holds for today, 2,327, we'll still maintain that short-term bullish intraday outlook bias, I would say, on the gold XAU / USD. First resistance to watch 2,382. Above it exposes 2,407. Only an hourly close below 2,327 may revisit again 2,307. A break below it expose the upper limit of the medium-term pivotal support zone of 2,280. Then what we have over here is WTI crude. I would say that this is the big mover yesterday, with a push up of that 2% increase yesterday, back above 78.40. And what's interesting, it managed to also close above the 20-day moving average as well. Okay, now very closely coming up next to the 50-day moving average at 81.70. And prior to this big move yesterday, there was a bullish divergence that highlighted yesterday as well on the daily RSI. So indicating to us that whatever people who are shorted over here get caught short, and this managed to get squeezed up on the upside, that actually potentially could explain yesterday's swift move of 2%, all right, due to potential short-term short covering on West Texas oil. So with that, right, we will still maintain yesterday, because of that positive element that has been unfolding on yesterday. So that's why during yesterday's daily dose, we flipped to a bullish bias All right, and we will continue to maintain that because of the ongoing positive element by the break of that 200-day moving average today. So with that, right, we'll be using 78.90, which is close to the 20-day moving average right now, I think as a support as well, and as well as 78.90 also confluence with this pullback support, this dotted gray line of a former medium-term descending trend line resistance that I drew from 12th of April, now turns to the pullback support at 78.90 as well, also conferencing with the 20-day moving average. All right, so as long as any, there could be a sign of a minor pullback coming in, at least on an intraday basis. Why? Because of the grossly overbought level on the RSI. Okay, so on the hourly RSI, pardon me. So as long as this potential pullback didn't, okay, so let me highlight the first support level to watch for that pullback. Okay, potentially this level here. Okay, this level here, so this could be the first support level to watch for at 79.40, maximum 78.90. So as long as this minor pullback didn't surpass below 78.90, we'll still maintain that short-term bullish bias intraday on the West Texas crude oil. First resistance to watch 81.70 for sure, with the 50-day also conversing the 50-day moving average. Above it says 83.55, which is this minor congestion area here of 29th of April and 30th of April. And as well, if you do the Fibo retracement of that previous decline from 12th April all the way down to last Friday's low, it's at the golden ratio of 61.8%, conferencing at 83.55 as well. Only an hourly close back below 78.90 will start to see this very choppy movement again to take it down towards 78.20. Below it sees last Friday minor swing low area at 76.70. All right, so that's for West Texas oil. So with that pretty much sum up the short-term technical outlook of the various cross asset classes. So before we go, let's take a look at the economic calendar. What are the data to look out for today? So at 1 p.m. Singapore time, we do have important data out from Japan, which is the Japanese consumer confidence. So market expectation is rather high again right now at 38.9. So if you look at the trend of the consumer confidence in Japan, it remains continue to be in elevated trend despite the fact that there was a drop in April to 38.3. So market is expecting a slight recovery to 38.9 for the month of May. That's out there at 1 p.m. So if you look at the 5-year trend, it's still in the uptrend phase. Okay. So what other data to look out for will be Germany consumer confidence that's up at 2 p.m. Singapore time. Then on top of that, that's pretty it for the Europe side of the thing. And over in Europe later as well, we do have one of the key member Eurozone. So the Eurozone inflationary rate, we call it the aggregate rate of the entire Eurozone will release on Friday. So Germany will release earlier today. So it's important data to watch as well, because Germany is part of one of the key countries inside the Eurozone. So Germany inflation rate, so that's the preliminary inflation rate for May, will be releasing in 8 p.m. Singapore time. And the harmonized one over here, which is the core inflation rate, market is expecting a slight uptick to 2.7% from 2.4% last month in April. So something to look out for. Okay, 8 p.m. Singapore time. Then other than that, it will be a rather quiet US session. Not much key data to look out for, except for Federal Reserve official speaking at 1:45 a.m. Singapore time. Fed Williams will be speaking. Then on top of that, early Singapore time at 7 a.m. Fed Bostic will be speaking as well. Okay, so these are the two key Fed speeches for today. Then other than that, yep, that's pretty much sum up for the key economic calendar to look out for today and tomorrow early Asia session. So with that, this is Kelvin here signing off. I wish that you guys have a great day ahead, and we shall speak again tomorrow. Thank you.